Analysts say it was an eventful week for Nigeria's fixed income market, which saw a Sukuk settlement, a Treasury Bills Auction, and an OMO Auction, a CRR debit, and Nigeria's May inflation figures. Joining me on the line from Lagos to recap this week's trading is Nkem Azinge. Nkem is a currency trader at UBA. Nkem, always a pleasure to have you join conversation on CNBC Africa. Shall we start by having you walk us through what the fixed income market was like this week?
Hi, Christy. Thanks for having me. It was an eventful week. There was a lot that happened. However, the Treasury bill market opened on a quiet note. It was trading on one-sided quotes between Monday and Tuesday. The NTM market was not very active. However, on Wednesday, we did see the primary auction that was held, where the CBN rolled over maturing Treasury bills totaling 14.61 billion. We saw stop rates drop by an average of 21 basis points across the three tenors, and we saw that demand was very heavy with a bid to cover of 6.3 times. Going into the week as well, in the OMO space, it traded mixed, but then they did have a bearish tilt, and this was because of the fact that secondary market bills had hovered around 5% levels. So we saw players come into the market to take profit in the anticipation that they would be able to pick up better yield at the OMO auction that happened on Thursday. On Thursday at the OMO auction, the CBN offered 80 billion and sold 80 billion. However, they maintained stop rate of 4.95 and 7.79 and 8.99. What was really noticeable from the OMO auction was the fact that the CBN was the bid range, basically. So the CBN did prorate the auction winnings, and it just speaks to the fact that the CBN is now no longer comfortable with using OMO as a primary tool for liquidity management due to the fact that it costs more. So they would most likely be using more of CRR for their liquidity management, since the effective cost of that is zero. We also saw that there was a bond auction as well, where most of the activities have been happening, because like we know, the Treasury bill market, the NTB space, there's really no activity there. Rates are really low, so most players are going to the bond space. So the bond auction, the bond market basically traded mixed on the expectation that there was going to be a bond auction on Wednesday. So it began earlier in the week with cherry picking because Sukuk was oversubscribed and not a lot of people won at from the Sukuk bond. So we saw people come into the market at the beginning of the week buying up high yielding securities that they saw. However, on the Wednesday, we saw that that trend stopped. There was more of a selling in the bond space, and this was due to the fact that there was a bond auction. At the bond auction, the DMO offered 150 billion across the benchmark papers of 5-year, 15 and 30-year paper. And we saw subscription levels of about 555 billion. However, the DMO sold only 100 billion of what was offered. And this just alludes to the fact that, okay, the Sukuk was oversubscribed. All prices have improved. So the FG is probably reviewing its revenue profile improving, and the DMO feels like it's in a better position to manage the debt of the country.
And how do you reckon the market will respond or has been respond to the CBN's obvious preference for the cash reserve ratio as a tool for intervention over the more popular OMO?
Well, I think that would mostly affect banks. You would see that banks would not be able to play aggressive in the OMO space like they have been, because they would be debited CRR, and that would affect their liquidity. However, other market players, the investors, the pension funds and asset management, they wouldn't really be affected by that. We'll just see them continue to go into the bond space. Right now, their priority is getting the highest possible yield they can get. So you see them going into this bond space where they have the highest yield. The 30-year instrument is now at 11.9, so you see them playing more in the bond space.
So we hear talks of demand pressure within the FX space. Help us understand what's happening there.
The FX space has been under a lot of demand pressure for the last few months, as we know, following the lockdown, a decline in oil prices, and FPIs leaving the country. So we've seen a lot of pressure there. The pressure still persists. There isn't a lot of liquidity. What we've been seeing happening is players who have FX basically matching trades amongst themselves. We haven't seen a lot happen. The CBN had a special wholesale auction a few weeks back, but we haven't seen that continuing trend. We've seen that slow. The market still seems to be under a lot of pressure. There isn't as much liquidity, and we expect that this would continue going forward.
So you project market seeing more pressure, especially with yields, and you also project that the market will remain soft. Help us understand how this will work out in the coming weeks.
Okay, so we expect that in the coming week, just given the fact that we saw oversubscription at the bond auction, we saw oversubscription at the OMO auction, and not a lot of people were filled. In the coming week, we expect that the market will be soft. We'll see yields being under pressure. We'll see most players who lost out at the bond auction trying to fill their offers in the secondary market. So we'll see yields decline. We saw that today as well. We saw bond yields decline 60 basis points on the long end of the curve, just because people were trying to fill the lost bids that they had in the market. So we expect that the market will be soft, the yields will come under pressure. There are no maturities next week. We expect that FAC would come in, and that would improve system liquidity, giving banks a better opportunity to trade in the market. But largely, we expect that we would start seeing yields in the bond space decline more rapidly.
Just on a final note, Nkem, before we wrap up this segment, where exactly are investors seeing more value within the market this period? What instruments have they been demonstrating more preference for?
The bonds, basically. Like we do know, the CBN did say that only for foreign portfolio investors and banks can invest in the OMO space. The Treasury bill, the NTV space, we basically have yields at 2%, so no one really wants to do that with inflation. We're looking for something at least closest to a more positive real return. So what we've seen is most players playing in the bond space. We've seen a few of the PFAs and asset managers also move into buying a bit of equities where they could get dividend yields that are higher than the yields you're seeing in the Treasury bill space. But right now, as we speak, most of the activity is going on in the bond space.